Hi, and welcome to the Stockscores Market Minutes for December 14th, 2015. This week I want to talk about this idea that perfection is not profitable. For some traders, in fact I would say many traders, perfection is the goal, to catch every trade, to get in at the low, out at the high, to really be impossibly good. And the result is that when trying to be perfect, it's easy to constantly be changing your strategy rules to account for the results of the last trade. You'll say, well, if I had just used this moving average or this indicator on that last trade, I wouldn't have lost, I wouldn't have taken the trade. And so you're always tweaking your rules just a little bit, and you never really get the idea that trading is about what happens over a large number of trades. Losing is part of trading. Missing good profits is part of trading. We don't want to trade on what will happen on the last trade, but rather what will happen most of the time. What can make us money over a large number of trades? Take a set of rules, test them over 100 trades and see, did they make money? And if a change in a rule means that over 100 trades you make more money, then maybe the change is warranted. But if you're changing your rules to fit the last one or two trades, you're really not using a large enough sample size, and you're trying to be perfect, and that will lead you to trading failure. All right, let's take a look at the charts. An important week this week because the markets had some weakness that broke some important trend lines. You can see that through the week, this is the intraday chart of the SPY, S&P 500 ETF, and it was drifting lower through the week, but on Friday it really gathered momentum to the downside, broke through support after a big gap down, and closed the day pretty near its lows. And that means we closed the week pretty near the lows and through some short-term support levels. You can see that short-term support level broken on the green line, and after really trending sideways for the last 5 or 6 weeks, we're starting to see a rollover into the weakness that we saw back in August. And given that there is a likely raise in interest rates around the corner, this could be the market trying to sell off in anticipation of that. So at this point I'm negative on the market, not really long-term negative yet because the long-term 5-year upward trend is still intact, but I do think that we want to be pretty defensive here given the breakdown on this weekly chart. On the Russell 2000, also a negative week, but it is holding above some support, only barely, so we may see a bounce next week, but again, I think caution is warranted with the small caps as well. Toronto Stock Exchange has been suffering worse than the U.S. market because of the weakness in oil, and this week and really today, Friday, was no exception. We moved to new lows, breaking through that support level on the intraday chart, and we remain in the downward trend that the Toronto Stock Exchange has been in since the spring, and of course largely motivated by the weakness in oil, but also the weakness in gold and the weakness that happens in the banking sector because of the weakness in oil. You know, the real estate market won't be as strong in parts of the country that depend on oil. There's a lot of things that trickle down because of that weakness in commodities for Canada. And that really shows itself in the small cap stocks, the micro cap stocks that make up the TSX Venture. They continue to move to new lows, nobody wanting to buy mining, nobody wanting to buy junior energy, and that's why the TSX Venture remains a market to avoid. Treasuries had a little jump higher late in the week, and I think it's probably just as a safe haven, even though interest rates are expected to be raised next week, although that's not certain, but it's the expectation. Money coming out of the stock market looks for a place to hide. It goes into bonds. That causes bond prices to go up, which actually means interest rates go down. Oh, the irony of it all. US dollar fell back again this week. I think a crowded trade. A lot of people long the US dollar, short the euro, and we're just seeing a little bit of that unwinding of that crowded trade. I don't think that this is a negative chart for the US dollar. It remains neutral to slightly positive chart for the long-term outlook for the US dollar, but we could of course break that downward or that green upward trend line that I've drawn. That would change everything, but for now I would say this is a neutral to slightly optimistic chart for the US dollar going higher. Gold moving to new lows at has little 1 or 2 day rallies, sometimes 5-day rallies, and then inevitably the sellers come back in and push it down again. And now this week, gold moving to new lows this week, local lows, and so it looks to me like the weakness will continue for gold. Oil, even worse, it broke down through support from the lows in August. You know, the market really tried to make a bottom. It even broke a downward trend line at one point, but it failed to hold that attempt at a reversal, and now moving to new lows, and really something you want to avoid. Fear took a jump up on this week, but particularly on Friday when we see that big spike up in the VXX, which is representation of the VIX, and that shows us that fear is coming back into the market. So I've lowered my ratings to bearish on everything. I think that you want to sit on the sidelines, be cautious. We might be able to up our rating on US stocks to neutral or bullish even if we get a bounce after the Fed decision. Sometimes the market worries a lot about the potential for news, and then when the news actually comes out, you get a reversal because the news was already priced in. So that's one thing that we may see next week, but leading into that decision, I think you want to be cautious. Important trend lines of support for US stocks have been broken, indicating more weakness ahead in the short term. Canadian markets dragged down by commodities like oil and gold, which are suffering. Fear on the rise, trade volatility this week, and practice really disciplined risk management. It is essential in this environment. That has been the Stockscores Market Minutes for December 14th, 2015. Have a great week in the market and trade well.